In this video, we're going to talk through why you shouldn't trade loads of currency pairs or loads of assets. You should check out my free trading course. This is a mini course, 13 videos, 10 different topics, totally free and doesn't take a lot of your time, but I'm very much sure that it's going to give you a lot of value. There's been thousands of people go through this now and I've heard nothing but good things. So definitely check that out once you finish this video, but don't skip the video because there's a lot of value in here too. Hello everyone and welcome back to the channel. I hope you're doing well. Hope you've had a profitable week. Currently, I'm running this nice trade on US 30 that you can see on the screen. I've taken some partials. There is news coming up soon, so let's see how that goes. But I hope you've had just a successful week as I have and my team and caught some lovely trades. Now, if not, don't worry, it's just the name of the game. In today's video, I wanted to go through a topic which I find quite important, and this is why you shouldn't trade loads of currency pairs or loads of different assets. Now, there's a running theme you see in a lot of long-term traders, profitable traders, and mentors, and that is that they don't trade loads of currency pairs. And most of this has been learned the hard way. When you start trading, you want to look at every single pair. You might have a watch list of 10 or 20 pairs. You may just look for your patterns on every single pair that you can find in the market. Now, while this might seem like a wise idea because there's a lot of opportunity, it also gets very chaotic. You might see that a lot of long-term traders only trade a couple of pairs. Now, you might see some traders just trade Euro USD. Others may just trade US 30. Some may trade a basket of around 3 pairs, 2 pairs, or 5 pairs. But the rolling theme is there's never too much to look at. It keeps it very simplified. And in this video, we're going to talk through why that is beneficial and the different benefits of only trading a few pairs and how it makes your trading more effective and more simple. Reason number one why you shouldn't trade loads of pairs is the news. Now, we know when trading currencies and also stock indexes, there's a lot of economic news that can mess with our trades and make it pretty difficult to trade successfully. So if you're looking at every single different pair, consider all of the different news that you have to keep on top of. Now we can see here an economic calendar for this week. So we have throughout the week, all of this different news coming out. It's quite a US dollar and Canadian dollar heavy week on the news. Now, a lot of weeks are also going to be a bit more hectic and we'll have news from different currencies. So we see last week we had Swiss franc news, we had Japanese yen news, Australian dollar news, New Zealand dollar news, all of these different pairs. So if you're trading Canadian dollar, Australian dollar, New Zealand dollar, US dollar, Japanese yen, pound, euro, you have so much to keep on top of. Sometimes you're going to miss this news and it's going to make it very hard to, first of all, hold trades. And sometimes if you do forget the news, that is then going to lead into losses that really did not need to be taken because you weren't accessible or you weren't on top of the news at the time. So that is the key first factor in why you should reduce the amount of pairs you trade. Is keeping up with fundamental news gets very stressful. You're going to have to check it every single day. And if you don't check it one day, it's very likely you're going to get whipsawed out of trades due to news that you weren't aware of. So it's just easier to keep on top of the news if you're only trading, 1, 2, or 3 currencies or 1, 2, or 3 stock indexes, as opposed to trading all of the different pairs on the list. You've got so much to keep on top of that it's going to get difficult to stay in tune. The second reason why you shouldn't trade loads of different pairs is currency correlations. Different currencies are going to move very similar to each other. You can see here we have 3 US dollar pairs overlaid and they all correlate well. Now there is 2 sides to correlations. There's good correlation and there's bad correlation. The bad sides of correlation is if you're trading just USD first pairs, so like USD JPY, USD CHF, USD CAD, if you take a loss on one and you have trades open on all 3, you're probably going to take that loss on all 3 of them because you can see how much they actually move in line with each other when they have dips and when they have upside price action as well. So it can be bad in that, right, where you get caught in, the same moves all the time. Another thing with trading only correlated pairs is, as well as taking, double or triple losses, you will also have difficulty finding a trade on all of your pairs if you're finding difficulty finding a trade on one. So this is where it can be useful to actually look at a couple different currency pairs, and I'll show my layout and the way that I approach things in a bit. But for this one, if you're trading loads of different pairs, you're going to get caught in those painful multi-losses due to correlations. So by cutting your list down from, say, 20 different assets, you're not going to be taking those double, triple, quadruple losses due to a piece of news or the price action of one currency pair going against the direction you thought it would. You cut that down to just one loss, and that's going to be a lot healthier and a lot more manageable in the long term. The third, the final, and the biggest reason why you shouldn't trade loads of pairs is simply the flow of the market and the flow of your trading as a whole. If you look at this watch list here, I've just rammed it up with every single currency pair you can imagine. This is what I look like when I was a beginner. This is what a lot of beginners pairs look like. You have absolutely every single pair you can think of on this list. Now, is this good for your flow, good for your mentality, and good for absolute control of your trading? No. You've got so many different things to look at. There's opportunities arising everywhere, or what you think is opportunities arising everywhere. And you could get in a trade on one and then totally forget about the analysis because you're too focused on another pair. It also leads to the problem where when you take a losing trade, you think I can make this back. So you'll go and dig through 20 different pairs for something that looks like a position so that you can get in and make that loss back. Now, generally, this is never going to be a good thing to do, and it can lead you to take consecutive losses and really dig a hole for yourself, which is completely unideal as a trader. So I think it's better to, rather than have a list like this, have a list like this, where you just have a few different pairs on there, and then maybe an index if you want to keep track of that. So I would generally like to keep my list to 3 or 4 assets. You could trade one if you can find success with that. Personally, I do prefer to have a couple more in case there's no opportunity in one of the pairs or in one of my assets. So what I'm going to do is run through my process now and show you how it is that I actually manage mine, so you can see why I choose the currency pairs I choose and why I think you should adopt a kind of similar attitude if you want to see effective, simple trading. So the major 3 currency pairs that I personally trade are Euro USD, GBP USD, and Euro GBP. Now, the reason I do this is because Euro USD and GBP USD are very smooth to trade, and they also have a good correlation, which means they run together. So notice how when I was talking about correlations, I said there's good and there's bad. Generally, if I'm taking one trade on Euro USD or GBP USD, I will not take a trade on the other. I will take one position and then run that. But basically, I have 2 different pairs that correlate, but not directly. So I can take a trade on one of them when it's there, but only take a trade on one of them so I don't run into that double loss problem we spoke about. Generally, I only run one position at a time anyway, so the double loss, triple loss is not a really problem for me. And I do only have those 2 correlating pairs, and I've got it in my rulebook only to take a trade on one. So when I'm trading Euro USD or GBP USD, the correlations are there safe. But because I'm trading both US dollar focused pairs, you have to focus on Euro news, pound news, and dollar news. I don't need to know when the Swiss franc news is coming out, the Canadian dollar news, the Australian dollar, the New Zealand dollar. Sure, sometimes these can have small effects on unrelated pairs. I mean, unrelated being a loose term. We'll talk more about this in a future video. But generally, the impact of these news releases is not going to mess up my flow or mess with any of my trades significantly. So I do like to focus on just these 2 pairs correlated. And then the other one I have is Euro GBP. Now, if you break down my currencies, you can see, okay, we have Euro, dollar, and pound. We are looking at the Euro and the dollar, the pound and the dollar, and we can also look at the Euro and the pound together. So this cuts out any correlation to the dollar and gives me a totally different flowing asset to trade. I can now look at the movements between the Euro and the pound and trade that. So if there's no setups on GBP USD or Euro USD and they're too heavily correlated, and for example, let's say in this move here, they're selling off too heavily and there's no way for me to get a trade, well, I can go and look at Euro GBP and maybe there's going to be an opportunity somewhere here on the other side of that or the buys. So this actually acts sometimes correlated, as you can see, and then sometimes it totally moves against the flow. So it kind of has that mix of correlation and uncorrelation, which allows me to trade something totally different if these 2 are being a little bit iffy and difficult to get a position on. So my method and my approach to trading has cut me down to only 2 correlated pairs, 2 pairs that are going to trade wildly different to those, so I can focus on 4 different opportunities or 3 different opportunities at a time. It also is in my rulebook not to take multiple trades on correlated pairs, so I'm not going to catch myself in multiple losses. And as well as all of this, I only have to track a few different currency fundamentals. So the way that I like to work it, and some examples for you, is to have 2 relatively correlated pairs and 1 cross-correlated pair that is not going to run the same as those, but will use the same currency type. So let's go through a few examples that you could take on depending on different currency pairs that you like to trade. If you like to trade the Japanese yen, you could look at these 3 pairs, for example, USD JPY, GBP JPY, and then the crossover from the US dollar and the pound being GBP USD. And one more example would be this one here. We have the Australian dollar, New Zealand dollar cross, and then the 2 correlating pairs are going to be NZD CAD and AUD CAD. So I hope you found value in this video. Now, it was good to come over to the charts and share some of this information with you. Next week on Friday, I'll be doing a full chart-based education video. We'll dig through some actual technical work. But this week, I thought it'd be good to talk about this very important topic, which isn't spoken about enough in my opinion. So if you've taken value from this video, make sure you subscribe and check out my other videos. There's lots of value to be taken there. Don't forget to sign up to the free course as well. And most importantly, I just hope you've enjoyed this video and I've helped you progress a little bit more. So thank you for watching, and I'll see you in the next video.